Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts.
Now let's look at the euro. How did I have any clue that there would be some sort of reaction off of that level in the first place in the euro? Well, what I did was, as I was looking at the euro and paying attention to, what else was going on, one of the main things I did was I went and I flipped through a lot of charts, and I was looking for these stronger than average moves on the downside. Now, a stronger than average move in any index kind of looks a little bit more like this upside move or this upside move here. In this case, we had an extreme move. So what I was looking for were other examples of extreme patterns where it had a pullback off of the highs. And what you will often find is that with extreme pullbacks off of the highs, they usually take place with a 3-bar pattern. Now, if you see a lot more bars, go to the next time frame up. If it's a daily chart and you see a ton of bars on the drop, go up to the weekly and you might find that it's actually 3 bars. Why we have that correlation, I don't know, but I've just noticed it over and over and over again, is that there is this 3-bar correlation on these extreme drops. And usually coming off of that extreme momentum move, once it comes into a support level, once it completes those 3 moves on the downside, those 3 bars on the downside, there's some sort of reaction off of that zone. It can lead to a continuation play later, but there's usually some sort of initial reaction to that extreme sell-off. One of the things that we looked at comparing it was just a stock example in Baidu. I used a lot more examples when I gave the class back in November. So again, if you want a copy of that PowerPoint, just email me at toni@tonihansen.com. Let me type in my name quick. A lot of people misspell it, so be careful. It's T-O-N-I, since, yes, I am a girl, obviously. Hopefully you figured that out by now. tonihansen.com, H-A-N-S-E-N. So there it is. So go ahead and email me for a copy of that. Now, looking at this, we had a similar action where it was that sharp 3-bar move back into that congestion zone. And this just gives you one example of how it reacted off of that support level. So in this case, we had an immediate sharp bounce, kind of what we saw on the dollar index actually. And it pulled back, kind of pulled up here higher again, bounced around, so that the overall time it took to get off of this initial low back to this previous high was about 3-4 times, or maybe even more, than it took to get from the first low, or the first high, to the first low. Let me clear this up because this is very interesting, because what you can see is that momentum had increased here on the bounce, but it still took longer for that overall move to form and come back into that previous high. So this is a type of shift in momentum where the smaller moves are still more rapid, but the larger context of the bounce declines or decreases in momentum. A very common pattern, like I said earlier, that I discussed this with, well, you can see it a little bit here, is you'll have 3 highs, and the rally, each of those rallies has similar sharp momentum going into those highs, but when combined, you have a slower momentum move than you did that initial bounce off low. So that is one form of a momentum shift, and it's actually one of my favorite reversal strategies too. So this was kind of giving us one example of how we could see the action play out as a potential situation in the euro. And what ended up happening, you can see, is that it formed larger continuation and even continued to head lower. Looking at that, I'm kind of getting the picture that we can easily see that same type of thing progress here in the future. So let's look at these things and kind of put them all together. Here's the dollar index, and here's this larger context. Here's that 3-low pattern. Basically, we're just looking at the reverse of what we looked on the FX pair. And it came into this congestion level here for the resistance. But notice that this is a really sharp upside move. And comparatively speaking, the dollar really hasn't corrected that much to this resistance level as compared to a lot of previous moves. So this could very easily play out where we have this V bottom right here, and currently we're like right about here. We could easily see this play out with a larger congestion type of move here before it then continues on the upside. And this is basically what I am looking at as a longer-term outlook for the dollar itself, is that I do expect more upside within the next couple of years. However, this is a larger time frame chart here, and it could very easily fall into this trading range or congest for about 2 years before we start to see that happen. The reason I expect more of a sideways type of congestion or trading range is simply because we have that extreme upside move. So it's more likely to play out with that longer correction, just like we kind of saw happen over here on Baidu, where it had an initial sharp reaction, but it took nearly about 2 segments longer than that previous rally before it ended up following that continuation. So looking at that, we're looking things playing out about to here, just kind of comparatively speaking. And this is something that you'll see if you look at a lot of charts that had that extreme bounce or that extreme drop. And I also know from my study of pattern development before that when I have these 3-wave momentum reversal, followed by a 4th trap into a lower low, that often signifies a larger reversal, a larger correction. So this puts our next levels of resistance at here, which would be about an equal move going into 100. Equal move resistance is based upon a previous rally or a previous drop. So we'd be looking at this rally into the year, the base, and then the continuation, where the continuation would be about an equal move compared to that rally. And the secondary target, here's our zone of highs over here. So we would be looking at that as the potential for a 3rd wave or continuation into a larger time frame objective. This, of course, is something that's going to take a number of years to play out here, but gives you kind of an idea of what we might expect here over the next year or two, where we're not probably going to get any strong directional moves. We're probably going to get more of the moves on the shorter time frames, like a daily time frame, where we get nice back and forth action, but it's going to not give you that strong trend follow through right away. Here's another example of the same type of thing. And this one, in case it had the 2B. So our dollar index had a 2T, which is, the reversal here. And this case, you had Google, which had a 2B pattern. Here's the sharp 3-bar drop. Bounces back pretty quickly, but the longer correction takes much longer. And what you can see is that a lot of these, I'm using different time frames. And so something that's, forming on like a daily time frame, you might see this exact same pattern on a monthly time frame. And that gave you the same type of follow-through, where it was a much more extended downside follow-through, had some equal move zone in here, back with the breakout, and then it had the continuation move here. So same type of thing, but this one's a little bit closer to what we see in the dollar index because we have a 2B on Google, which was similar to our 2T on the dollar index. Always, if you can go back and listen to this archive, it's going to help you a lot better because it gives you the chance to really look and compare these and kind of drill it into your head rather than just trying to pick up on everything the first time around.
Thank you for listening to our podcast. Please visit www.ise.com/podcasts